second hour, I'll start looking at the pictures that you guys posted. So if you need feedback, it'll probably be after 10 a.m. Wayne, just let me know when you're done walking. We'll make sure you get all the feedback you need, because that's what we do. Good morning, everybody. Welcome to the room. Remember, guys, this is an informational and educational room. This room is not designed to call trades for you. This room is designed to teach you to read your charts so that you can make great decisions on the trades that you're taking, so that you can understand the advantages that you can recognize using the T3 software so that you can turn those advantages into a trade. You will find that about 90% of your day is doing nothing. 90% of your day is waiting for those advantages to transpire. 10% of your day will be active trading. But the cool thing is you're going to understand when you learn to read your charts, when you focus on process rather than profits, guys, you're going to understand where the market is likely to continue. That's going to become an entry spot for the highest probability trend trade that we teach. You're going to understand where the market is likely to go. This is going to help you make good decisions on targets, and you will understand where the market is likely to stop. And we call those termination conditions, and termination conditions can literally shut down a trend that's been going on for however long. So we're going to focus on these things, guys. This is our goal each and every day, is to teach you guys to learn to read your indicators. Always starting with news. Today is Thursday, December 4th. At 8:30 a.m. there was unemployment claims. I don't know if anybody was watching it during that time. A lot of times red impact, high impact news can create fluctuations within the market, spikes, jumps, bumps, all the things that can mess up a great looking pattern. So we check this each and every morning to make sure that we're not trading into it. Down a little bit on that news, right on. Down from resistance too. And then we're just going to go ahead and focus on the good stuff, guys. We're going to get in. I talk about TradingView. I also talk about NinjaTrader. Most of you are on NinjaTrader in here, so I am going to lean on that one a little heavier. Guys, trading is about probabilities. Trading is about finding a pattern that creates an edge. It's about doing the same thing every day. And I mean every day, the exact same thing, because you can prove that it wins more than it loses. Why wouldn't you do the same thing every day if you've proven that it wins more than it loses? That's what we talk about in here, guys, is we make sure that you have that advantage, that you understand that edge, and that comes from the rules. When we talk about TradingView or NinjaTrader, guys, I lay before you, through very simple plans, the highest probability scenarios for using the software as a brand new user. We call them the KISS plan. There is one for TradingView, and there is one for NinjaTrader. And now the most important phrase that you can take off of this one initially is that this plan is a stepping stone in your learning journey, guys. It's designed to teach you to read your indicators. The trades in these plans are designed to optimize your chances of success. One of my favorite phrases is that confidence comes from the memory of success. So if you can heighten your success, you're also doing the same to your confidence. You're creating trust in the methodology. And when you trust your methodology, you don't hesitate as much. And hesitation takes you from the best entries. It will be through study, simulation, class feedback, and continuous practice that you will create a plan that suits your needs. Guys, you'll be able to write your own plan. But until you have that ability, until you've got those reps under your belt, I'm going to hand you the KISS plan for TradingView, and I'm also going to hand you the KISS plan for NinjaTrader, guys. Both of these plans give you checklists for entry, ideas on management, and they revolve around simplicity. I can't stress that enough. A trade, I'm going to jump ahead real quick. The highest probability trend trade that you can take, so I'm talking to you guys on NinjaTrader right now, is 3 rules. This is your flow chart. Rule number 1 says that your large chart must have strong trigger lines. If this rule is true, you are gifted the advantage of momentum. And when we talk about momentum, we're talking about a market that's very difficult to stop, a market that is pushing in the direction of an established trend. If that rule is true, you'll go to the second rule. Think about those flow charts. If then, if then. If it's not true, let's sit on our hands and wait for it to be true. But if I have momentum, well, then I'm going to make sure that there are no termination conditions present, no areas likely to stop the market. This is going to assure me room to profit targets. We're going to call it a clear path. That's the advantage that rule number 2 provides. Now, momentum and path are your core. Momentum and path are the foundation on which your trading empire will be built. And you'll see in this room, posted by people, that there are a lot of ways to capitalize on the information the software gives through only momentum and path. Our initial entry taught in this room is rule number 3, and that's all it is it defines an entry. And it's going to give you the advantage of entering the market right where the market is most likely to bounce and continue in the direction of momentum and path. So it's only 3 rules. And it's only 2 charts. You have a large chart. Everything starts on the large chart, guys. The large chart takes 1 bar and it will define direction, momentum, and areas. That 1 bar it's slow. It's a very broad stroke of a brush. It gives the general opinion of the market. It lets you know what's happening in the big picture. Inside of this 1 bar, starting at the very bottom, your entry chart will show the inner workings. It's like an X-ray, if you will. After the fact, historically, in a market that gives you a trend trade, you're going to see a retracement on the small chart. You're going to see the areas inside of triggers, which is where rule number 3 says it's time to get in. And you're going to see continuation. And this yellow square around the 1 bar is all of these bars on the small chart. We use this small chart because it allows us to reduce risk and it allows us to actually get an entry furthest away from our profit target. So only 2 charts, only 3 rules. We're going to keep it as simple as possible. We use the 2 charts, and I love this analogy, guys. Who are you trading with or who are you trading against? Most of us don't realize that we have absolutely no influence on the market. Our 1 contract, our 2 contracts, our 10 contracts have 0 impact. There are the people in charge. We're going to call them the large crowd. And the large crowd creates trends. The large crowd creates the momentum that we look for rule number 1. And the large crowd reacts to the areas on your large chart, creating termination conditions, areas where decisions are made. We let the large chart lead the way because typically they win. Now your small chart, I want you to think of them as the small crowd. These are the fighters. These are the people that have just enough money to create what we call a retracement. And a retracement is a small movement and it goes against the underlying trend. So if the large chart says up with momentum and nothing in the way, the small crowd creates this little ripple that pushes the market down. Now we love this ripple. We love this fight because rule number 3 has you entering the market right where the small crowd is most likely to fail. And the small crowd, when the large crowd has given you momentum, when the large crowd has given you a clear path, the small crowd typically fails 70 to 80% of the time. Which means that when you follow those 3 simple rules for the highest probability trend trade, you're putting yourself in a position to win up to 70 to 80% of the time. Does that make sense, everybody? That's what we're focusing on, not the idea that 1 trade produces 100% winners, but if I take 10 trades with the high probability trend trade, I'm likely to win 7 or 8, and then we'll incorporate management to get the most out of them. We're going to talk about the indicators that it takes to have these rules met. Both large and small charts will have areas. Areas for all intents and purposes, are horizontal lines that move across the chart. They all have names. So there is divergence highs. This is a magenta line. And what divergence means, and this becomes important when you start moving into what we call medium probability trades, it means that the market was pushing up, the buyers were in control, and the sellers steal their momentum and push the market down. You're going to see that represented as a magenta line, and that magenta line becomes a line in the sand where the sellers may strike again. And if the sellers are in control and the market is pushing down, if the buyers steal their momentum and push the market up once again, we're going to see that line coming right off of the pivot. And that pivot, that line, becomes a line in the sand. There's a good example right there where the sellers may try to take back over. You're going to see Fibonacci resistance. These are red lines that run across the chart. These are based on tens of thousands of calculations from different time frames. And they're going to show you on the large chart where trends may end. They're going to show you on the small chart where entries may come from. Fibonacci support does the exact same role in a downtrend. You're going to see yellow 1-to-1s. Yellow 1-to-1s are fibs in the moment, guys. These print live, and when the market is trending up, they may behave as resistance, the same as a red line, the same as a divergence high. And in a downtrend, they may behave as support, the same as a blue line, the same as a divergence low. And then finally, you're going to see a midband. And it's just important that you know the name. It's a moving average, and it squiggles through your chart. And when price is above it, your midband will turn green. It may behave as support. And when price is below it, your midband will turn magenta, and it may behave as resistance. And guys, you'll notice that I don't speak in absolutes because trading is probabilities. You're also going to have trigger lines. Trigger lines do 90% of the lifting, guys. Trigger lines, there's two. There are small triggers, which will be the solid lines. These are nothing more than a fast moving average. I have no idea the math that goes into it. You don't need to know the math that goes into it, but know that these two solid lines work together to be the small triggers. Now your large triggers are the dashed lines, and the dashed lines are a slower moving average. And we're going to use trigger lines in everything that we do, guys. When they're green, they're going up. When they're red, they're going down. And what we're going to do is we're going to use trigger lines first to define momentum. We're going to make sure that rule number 1 is met using nothing more than the trigger lines. We're going to use the trigger lines to define areas that could be termination conditions. And we're going to use these large triggers. These are the slow moving average. These are going to help you pinpoint your amazing entries on that smaller, faster chart. So those are the working parts. And again, it's only 3 rules. Resist the temptation to add things to the mix. Guys, we're going to break it down and we're going to keep it super simple. We're going to go back to the live market. We're going to look at a lot of examples, but I'm going to lean heavy on 101 this morning before we get to our live chart reads. So rule number 1, on the large chart, must have strong trigger lines. Remember, your large chart will define direction, momentum, and areas. Your first 2 rules have got to be met on the large chart before you ever go to the small chart and look for an entry. Strong triggers will be the easiest lesson that you ever get. So large chart, if the background is green, the trend is up. The path of least resistance for you is to look for trades going with the trend that's already established. So only looking for rules to be met for high probability trend trades long. In a downtrend, when the background is red, only looking for rules to be met for high probability trend trade short. Guys, the trend is your friend. Counter trend is fun when it works, but the trend is your friend. So the the strong trigger look, I'm going to pull out my trusty pin here. In an uptrend, your small triggers will be green. In that uptrend, your large triggers will be green. They have to be, or you don't have rule number 1 met. The look for strong triggers looks like scissors that have been opened, because when the smalls break above and away from the large, when the large are wide, angled in the direction of the trend, guys, the odds are favorable for the market to continue up. Odds favorable momentum is our battle cry. Odds favorable momentum pushes a market. It breaks key areas very often. And guys, it'll even cover some of the mistakes that you make. Now in a downtrend, the small triggers are red. The large triggers are red. It's imperative that the colors match. Smalls will be below the large triggers. The large triggers will be wide and angled down. And it is that space that's created, that open scissor look, that lets me know the odds are favorable for the market to continue down. Once again, odds favorable momentum, guys. I want you to latch onto that phrase. Every time you see strong triggers, I want you to be excited about the idea that it's going to be very difficult to stop that market. And momentum is not a forever instance, guys. When your scissors close, when the small triggers return to the large triggers, that's what we call a weakening of the large triggers. And when I have weak large triggers, anything can happen up or down. I'm a big fan of language, guys, and you're going to find that I lean on phrases to identify advantages. Separation is strength, strong, odds favorable. There's a lot of things that should create confidence. No separation is weakness. Anything can happen. This is where key Fibonacci areas tend to hold. This is where reversals very often happen. So this is our most current bar on the S&P. Does everybody see the small triggers above the large triggers? The large triggers are wide, they're spaced, the scissors are open. Guys, rule number 1 is met on the S&P right now as we speak. Can you give me a Y if you see it? Especially my newer users as you work through these things. This is rule number 1, 100%. Let's go see what happens. Weak triggers, right at an area, the area creates a bounce. Weak triggers, right at an area, the area creates a bounce. I'm about to lose NinjaTrader, so I'll have to reopen it. But guys, it's a very specific, it's a very definitive look. Separation is strength. Without the separation, rule number 1's not met. I love it. So now, I'm going to reopen NinjaTrader. But now we are going to go to rule number 2. And that's it. It's a one picture lesson on rule number 1. And once you have momentum, guys, once you have the best of the best, once you have that strong look that's hard to stop, we're going to make sure that there's nothing in the way to stop it. We're going to make sure that there are no termination conditions. We're going to make sure that we have room to profit targets. I'm leaning on this one a lot because, guys, this is the most broken rule among new users. A termination condition is a Fibonacci-based indicator that may reverse the market. It's a horizontal line on your large chart, guys. It is resistance. It is divergence highs. It is yellow 1-to-1s. It is support. It is divergence lows. They are all equally important because these are the lines where the large crowd makes decisions. These are the lines where buyers buy, where sellers sell, where the two forces fight one another. These are the lines where reversals are very likely. So in order to define a termination condition, I want you to grasp a hold of the big chart concept. We're going to let the large crowd get there. We're going to let price reach an area. So once again, we're relying on language to identify advantage. Price reaches Fibonacci resistance. All you have to do is ask yourself, where are my triggers? If all 4 triggers, both small, both large, remain below the area of resistance, the divergence high, the yellow 1-to-1, guys, that's a termination condition. And there's some options that may happen. So a termination condition may create an untradeable bounce. A termination condition may break completely, or a termination condition may reverse the market. And here's the sad truth that nobody likes to admit. I'll never know. I'll never know what the reaction is going to be. So if price reaches an area and all 4 trigger lines remain above or below resistance or above support, rule number 2 says that your path is not clear. Absolutely no trades into the area. Wait for the reaction rather than predict. Does that make sense, everybody? Wait for the reaction rather than predict. Look at that live market. Price reaches Fibonacci resistance. The triggers don't break, and you can instantly see the reaction coming off of that area. You see it even clearer on a smaller, faster chart. Pretty cool, right? We knew about it for the last 20 minutes. If you were in a long trade, what a great place to take profits. But what Rule 2 says is I'm just not going to initiate a trade into that area. The same way I didn't initiate a trade into resistance, into one-to-ones, into support, into resistance, holy crap, into a divergence low. Guys, you have a magic 8-ball telling you exactly where the market may stop, reverse, or bounce. And all you have to know is that when price reaches an area, you count trigger lines. And if none of them are through, let's wait for the reaction. Pretty cool, right? But areas break. They have to break, or we'd be caught in a range forever. So I want to talk about what it looks like when an area breaks, because it's going to set you up for your trade. You're going to anticipate. You're going to be ready. So everything begins. Every line that's hit will be a termination condition, at least for a moment. If I am not already in a position, rule number 2 says that when price reaches support and all 4 trigger lines are above, wait to see what the reaction is. No trades directly into the area. And if I'm already in a trade, I may choose to hold based on momentum, but that's a great place to get paid. So termination conditions were good, right? If it reaches a line, sit on your hands. And it's not the price bars that tell you it's broken, it's the trigger lines. So here comes the second trade on the plan. When the smalls absolutely smash through the area, if I have momentum. Guys, this look lets me know that that blue Fibonacci support has the potential to break. Now, it's not broken yet. It's only potential. There is a trade on your plan that gives you the opportunity to capitalize on that potential. 2 triggers is an okay look. 3 trigger lines, both small and 1 large, that's your best look. To trade the breakout, to trade the plan that I give you, oops, wrong one, I'm going to go to it real quick. Your second trade says 3 of the 4 triggers must be through the area. We want the best chance, the highest chance of success. This is what we call a medium probability trade. This will be the majority of your trades. But once all 4 trigger lines, both small, both large, get south of support, support magically turns into resistance. The area is broken. The path is clear. And guys, your path will remain clear until you hit the next area. And when you hit the next area, you're going to go right back to number 1 and wait for the reaction. Go in the other direction. First price reaches the area. Where are my triggers? All 4 triggers remain below resistance, the same way they remained above support down here. I'm going to wait. If I'm not in a trade, guys, I'm on my hands. I'm doing nothing. I'm scratching the dog behind the ears and texting my wife that I love her, telling her I just don't have rules met. If your small triggers, absolutely smash through the area. 3 trigger lines through, that's your best of the best look for a potential breakout. There's a lot of opportunity there, but you've got to lean on momentum. You've got to lean on the perfect entry. Once 4 triggers get through the area is broken. The path is clear. The path remains clear until you hit the next area. So this is your cheat sheet. I'm going to drop it in the room. Color-coded even. If price reaches the area and no triggers break, it's a big goose egg. It's red. No trades into the area. If 2 triggers smash through with momentum, it's still red because this is not your highest chance of success as a brand new user. You will probably latch onto this look as you grow with the software. 3 trigger lines, 1 large, 2 small, above resistance is the best of the best look. But 4 trigger lines, that's the clear path. That's rules met for the highest probability trend trades you could ever take. Is everybody good with that? Give me a why. Because I'm about to let you in on a secret. There will be times when areas are stacked. There will be times when it's fib after fib after fib, where it's fib into a 1-to-1 into a divergence low, guys. There will be times where you're sitting on your hands, bored to death, fearful that you're not going to make any money. Guys, this is 90% of your day. True story, probably closer to 95. You will be patient. You will be waiting because you are going to believe in your heart with just a little bit of study that trading directly into an area with absolutely no triggers through is a recipe for disaster, that it loses more than it wins, that your edge is gone. The futures markets trade billions. Billions every day. I wish I had some brand new people. I'd ask, how much do you think it takes to be a six-figure trader? $400 a day. There are 252 trading days in a year, typically. It's $100,000. $400 a day, average. It's $100,000. You don't have to be in every move. You don't have to be the first one in. You don't have to be the last one out. There's a way to get there, guys. And it stems from momentum and path. Are we good? That's your first two rules. Should we go take a look and see if that termination condition logic really holds water? Holy smokes, look at that. That's what we would call an untradeable bounce. Does everybody see it? You saw the momentum, you got excited about rule number 2, and then it hit a red line, and look what the market's doing. So if you took the long trade and you just got run over, that's what we call an avoidable loss. Avoidable losses kill accounts. Trading into resistance because you believe it has to break. Trading into support because you're convinced the market has got to get through that line. Look at how often these key areas stop forward progress. Weakness, support, resistance, one-to-ones. Holy crap, how am I ever going to make money? You're going to make money by taking the easy trades. You're going to have the potential to win more than you lose by waiting for the advantage, waiting for the edge, guys. And now we're going to go into rule number 3. I love rule number 3, but this is the one with the most moving parts. So I built something for you today. This is the language of rule number 3. And I want you to take this sheet and I want you to print it out and I want you to lay it down in front of you. And if you do that, you will be absolutely floored at how easy entries become. So rule number 3 says that you are going to buy or sell a pullback. What's a pullback, Mark? Well, I'm glad you asked, guys. A pullback is nothing more. Where's my picture? Hold on. Patience, guys. Don't yell at me. A pullback is nothing more than a small movement counter to the underlying trend. So let's go back and review. Does everybody see momentum and clear path on the large chart here? Because if you do, then and only then can you go to the small chart and look for an entry if you're following the KISS plan. So while everything says up, while the momentum is strong, a lot of silence. So I'm assuming maybe you guys don't get it. Be vocal, guys. Be bold. With momentum and path, I'm going to wait for the small crowd to fight. The small crowd fight is what we call the pullback. That little push against the large chart trend, a reversal. It begins with a reversal bar. That's what lets you know the fight is on. But I'm going to buy or sell a pullback at an area, at Fibonacci resistance or support. I'm going to buy a pullback at yellow one-to-ones. I'm going to buy a pullback at a mid-band. The same way these areas can stop a trend on the large chart, they can kill the small crowd on the small chart. So I'm going to buy or sell a pullback at an area inside of triggers. It's not a difficult phrase to remember. I'm going to buy or sell a pullback at an area inside of triggers. Write it down. I'm going to buy or sell a pullback at an area inside of triggers. Now, why is it inside of triggers? I'm glad you asked. Because triggers are moving averages. And there's this phenomenon, if you will, called the regression of the mean, guys. price returns to large triggers. Almost always. Price pulls back to large triggers. It breaks away and it pulls back, and it breaks away and it pulls back. And this happens all day long. So on your small chart, we're going to buy or sell a pullback. There it is right there. At an area, fibs, midbands, or yellow 1-to-1s, and those areas have to be inside of those large triggers. Is everybody with me on this one? Triggers define the retracement, areas define the bounce. Now all of this is small chart, guys. Your large chart's not even going to change its look. Your large chart is still going to have odds favorable momentum up. Your large chart is still going to have a clear path up. Small chart's just going to get you to the best spot. The tighter your triggers are, one on top of each other, the least amount of risk, the highest accuracy that you're going to have. When they're like this, two snakes riding piggyback, we call them favorable large triggers. This is your pattern. It's consistent. And I'm going to do this. I love drawing. You ready? When the large chart has momentum and a clear path. Remember, this is a flow chart, right? When the large chart has momentum and a clear path. This is your entry pattern. The reversal bar begins the pullback. The reversal bar is not your entry. It's the beginning of the fight. You're going to define where the pullback is most likely to go using large and synthetic triggers. All it is the large triggers from both charts. The smooth ones are from the small chart. The stepped ones are from the large chart. They work together to define the retracement zone. Trigger lines aren't bouncy. That's not your entry. Entries come from areas inside, all caps, loud speaker. Areas inside of that retracement zone, whether it is a midband, a yellow 1-to-1, or Fibonacci. But here's the key, guys. It has to be somewhere below the top line and somewhere above the bottom line. Anything outside of the triggers is not a part of the equation. Anything below the triggers in a long trade, guys, I don't want to get in down here because the market is already pushed through the retracement zone. The market has already decimated the areas inside most likely to create a bounce. Anything below the triggers in a long trade, I want you to call it where the market should not go. That's where the advantage of rule number 3 is no longer in play. This is actually where your plan tells you to put your initial stops, where the market should not go. Does that make sense, everybody? Reversal bar starts the pullback. We're going to do a couple of these. We're going to go back and find them. Trigger lines define the retracement. Areas, inside of triggers define the most likely spot for a bounce. Because the large chart, the big chart, the slow chart, the large crowd, when you say through the trigger line but inside, I'm not sure what you mean, OG. Inside of triggers. Areas inside of triggers. That's your phrase. So let's do this real quick. I'm going to do this. Nothing here is inside of the triggers. Nothing here is inside of the triggers. Does that make sense? Entries don't come from up here. Entries don't come from down here. Sometimes when we type in the room, it's hard to understand one another. Does that help a little bit? Maybe with the shading? Help clarify? No trades from here. No trade entries from here. It has to be that range inside. It's very specific. Or if you're 3 years old, very specific. And what's cool is because of the large chart advantages, because of all of that momentum with nothing in the way, all you're going to do is activate a limit order just above the highest point of support, closest to the reversal bar, and you're going to hope that the small crowd gets to you. Sometimes they will, sometimes they won't, Sometimes they will just run you the fudge over, but that's okay. You're going to have a stop waiting to minimize risk, to minimize losses. Guys, anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. The idea is that you do the same thing every time so that you can lean on the probabilities. So in a downtrend, large chart is in a downtrend. Large chart has momentum to the downside. Large chart has no termination conditions. Is everybody good with that? Large chart rules are met. The reversal bar, let's do the picture again. The reversal bar begins the pullback. The reversal bar is not the entry. It's the start of the fight. Trigger lines define where the fight's most likely to go, where the retracement is most likely to occur. Areas inside of triggers. And guys, I really want you to latch onto this phrase. Buy or sell a pullback at an area inside of triggers. It will absolutely change your life. There's one line inside of triggers. Do you guys see it? No trades before the triggers are reached. No trade entries from the wrong side of the triggers. It has to be inside of that zone, inside of that range. That's where the advantage is. Your initial stop goes up here where the market shouldn't. And 20 to 30% of the time, they will catch your stop. This is what we call a cost of doing business. I was talking to a buddy yesterday. He hates losers. Guys, if you have odds favorable momentum, if you have at least the potential to break, if you have the perfect area inside of triggers, I want you to change your verbiage. If the market goes where it shouldn't go, you didn't just take a loser. You took the perfect trade that didn't work. You took a trade that typically wins 70 to 80% of the time. You followed a methodology that you can prove. You followed a methodology, hopefully, that you studied, that you practiced, that you verified. That's not losses. That's a cost of doing business. That's paying rent. If they can get all the way down here, change your verbiage. It's not a loser. It's the perfect trade that didn't work. Does that make sense? Losers have a negative connotation, guys. It's a cost of doing business. So this created a little bit of confusion yesterday. And I want to make sure that we clear it up a little bit. When you're looking for a trade, when you have momentum, when the path is clear or at least has the potential to break, the market's trading all the way up here, and your large chart bars look like this. There are no tails. It is screaming to the upside. Does that make sense? Now, if I look at a picture after the fact, I see these tails. These tails don't exist when it's time to look for an entry. The market is all the way up here. The market is all the way up here. That tail is this pullback. We're not waiting for the tail. We're not looking for the tail. What we're doing is we're saying this area inside of triggers is where that tail is most likely to form. These tails are nothing more than a historical study tool. If you wait for it, the market's all the way back up here and you missed your trade. So the pullback to the area inside of triggers, the low of this move down is the bottom of that tail. If you lose the trade, if they blow through it, it's going to turn into a reversal bar against you. Does that make sense? So we're not trading tails, we're trading pullbacks to areas inside of triggers. We can go study this look by going back to a large chart. Look at that, termination again. And if I find momentum and path, and I circle one of these tails, does everybody see that circle? I've got momentum, whoops. I've got the potential to break. Give me a Y if you see that. This is an important lesson. This is how you're going to build trust, guys. Let's see where the bottom of that tail lines up on a small chart. Market pulls back. Well, the one-to-ones were there in a moment, and it actually goes a little bit below. But guys, this is your pattern. If it's on the wrong side of the triggers, guess what? That's probably not your trade. That's okay. There will be more. Back it up. Find them again. Circle these tails. But don't say, was it a trade? Say, did I have momentum? Yes. Did I have the potential to break? Not really. It was directly into one-to-ones, but there's your pattern. Pull back to an area inside of triggers, and then you can just back up and keep doing it. I'll open up crude oil. We'll see if we can find some opportunities there. So when I introduce the concept of tails, guys, it's not that we're trading the tails, as we are trading pull back to areas inside of triggers. Momentum, 3 triggers through, and the market's trading all the way up here at 81. There's your pullback. There's your bounce off of areas inside of triggers. There's your continuation of the fib. This circle is that tail. Do you guys see it? So we don't trade tails. We don't want the tail to form inside of the triggers. We want the small chart to pull back to an area inside of triggers. I know there's a lot of people working on entries right now. Let me know that that makes sense. And it's the same pattern. That was on the 6th of November. This one was in 2021. Heck, that one was 2022. And it's the same look every time. It's a matter of momentum. It's a matter of path. And then, and only then, does it become a pullback at an area inside a trigger. So give me a Y if you see that the current crude oil market has momentum, smalls below the large, that there's nothing in the way, that the rules are met. Watch this. See that mid-band right at the very top? Whoops. Let me get my correct management in there. There is no tail on the large chart, right? Everything says down. But I can see that mid-band right at the top of the triggers. Guess what? If the market is going to retrace and bounce, that's where it's most likely to happen. I just called my shot. Hey, what's up, Mike? Good to see you in here. So do you see how there is no tail? We're hoping for the pullback to the areas inside of triggers. That's what creates the tail. Kerwin, does that help a little bit seeing it? Mr. Joker, does that help? I know you're new in here, right? OG, working on those entries. Who else is working on their entries? Wants to get the best of the best. Guys, we're just waiting. Come get me. Mostly following. So let's back up. And I'm going to do this real quick. I'm going to take my synthetic fibs off of here just for the sake of lessons. Give me a Y if you see momentum and 3 triggers through, everybody. How do I study this look? I circle a tail. Tail's not my entry. What's my entry? My entry, use the language, is a pullback to an area inside of triggers. And when the triggers are split, I've got more options. When the triggers are separated, I've got more risk. When they're tighter, one on top of each other, I've got less risk. Guys, that's it. As the market comes up, the mid-band comes down, it is literally going to be right at the top of my retracement range, which means I'm going to have all of 4 or 5 ticks of risk on this trade if it comes back and fills. So NinjaTrader users, that's our lesson. First it's momentum, then it's path, and then, and only then, do you begin to look for the pullback at an area inside of triggers. You got to study this, guys. You got to go back. You got to find those tails. You've got to embrace that momentum. You've got to look for that clear path. And when you have it, the easiest way to study the pattern is to just go back and circle them. And in case you just really want to drill it into your mind, I'll give you guys a spreadsheet. So if you're brand new with me, a trade isn't so much your desire to make money. And a trade really has nothing to do with whether or not rent is due. I'm going to drop this spreadsheet in. A trade is strong triggers coupled with a clear path. And when these two are present, defining your entry. Finding the area inside of triggers. And guys, it's the same look every time. It's the same pattern every time. I personally feel, and my feelings should mean nothing to you because that's exactly what they're worth. As a brand new user, I only have two options. Either my rules are met and I take the entry no matter what my gut tells me, or my rules aren't met and I choose to sit on my hands and wait. And while I'm waiting, I'll go study pictures. So you have to be able to recognize strong triggers, rule number one, but you've also got to know what it looks like when that advantage is gone, when you don't have an edge. So I've given you pictures of both. You have to know what a clear path looks like. I've given you plenty of examples, but you also have to know what it looks like when there's not a clear path. Look at how many pictures are in termination conditions, because that's the most broken rule among new users. It was with me. And then some ideas of entries. The next page of that spreadsheet I gave you is about 400 pictures of the pattern, 500 pictures of the pattern. Let's just click on one. And that content is no longer available. I probably need to go through and clean these out. Let's click on a different one. This one says this look wins more than it loses. Momentum, path, pull back to the area inside of triggers, and that one didn't work. Small loss. And guys, I'm so sold on the pattern, not the result, that there are losers posted in the room. There's momentum, room to trouble, pull back to an area inside of triggers, out at trouble. That's a historical from Pete from 2024. I love simplicity. Let's look at another one. First, it's momentum, clear path, pull back to the area inside of triggers. The high probability trend trade is not your only trade, guys. It's the trade that allows you to see the rest of the trades. It's the trade that teaches you to read your indicators. It's the trade that shows you exactly what it is you're looking for, so that you can do the same thing every day, so that you can take the same trade every day, so you can latch onto the same advantages every day. Are there any questions about the high probability trend trade? That's Ninja. That's my Ninja run. And I wanted to make it very thorough this morning. Learn that phrase. Buy or sell a pullback at an area inside of triggers. It'll change your life. Buy or sell a pullback at an area inside of triggers. Not above triggers, not below triggers, areas inside of triggers. It will absolutely create confidence. It'll absolutely put you in a position where you will know exactly where your trade comes from long before the trade ever sets up. It's a very refreshing feeling to have that. So I dropped that in the room as well. That should be printed out and put on your desktop. Now we're going to talk about TradingView. That's the other one. Ninja Trader's awesome. TradingView is awesome. It's like having two different kids. I don't have a favorite. I refuse to have a favorite. Both of them are wonderful in their own special way. So what we're going to do is we're going to talk about TradingView. TradingView doesn't have Fibonacci, guys. Programmers haven't figured it out yet. So there is an indicator called Chart Prime. They're a third party. They are not Nexgen. I can't be Chart Prime Tech Help, but they give you areas of supply and demand. These things are rock star solid. I'm a big fan of them. I pay the $50 a month for mine because it gives me an edge. You don't have to. There's free versions, but they will behave just like Fibonacci. Don't trade directly into them. Trade from them. Everything else is pretty much the same, guys. Divergence highs and lows, one-to-ones, mid-bands, trigger lines, All that's the same. The biggest difference is the time frame. So your large chart, your big chart, your slow chart is a 15-minute chart. Think about what you can accomplish in 15 minutes, guys. This thing is a glacier. So the workspaces that I created for it get rid of the background color. It has no relevance. And they gets rid of the large triggers. They have no relevance, not in a chart this slow. So small triggers will define direction, momentum. Areas are defined on the large chart. Terminations are defined on the large chart. Areas that we shouldn't be trading into. Your small chart is a 1-minute chart. Now this is still a pretty big chart. Lot goes on in 1 minute. But 1 minute defines the immediate strength of the market. The 1 minute is going to define your entries. The same way the 5-1 will define your entries on Renko charts. I want to share something with you guys. And I think this is pretty cool. What I'm about to teach you is nothing new. This is a page out of the PDF that was given to clients in 2004, guys. It's a trend trade using minute bars. Pullbacks to areas, closes on the correct side. The methodology is nothing new. Nexgen's been teaching people to do this for 30 years. I'm going to teach you to do it right now. Everything starts on the large chart. Your large chart defines direction using nothing more than the small triggers. It's either up or down. If there's anyone not cool with up or down, let me know. The one thing that I get from you guys that start to really lean on the plan that I give you is that this is a bacon saver. This is what keeps you out of opinions. This is what's going to get you not fighting what the market is doing. If it's going down, go down with it. And if it's going up, go up with it, guys. It's the easiest thing to do. Direction is done. It's a half a second. Once you have the most current bar with the triggers up, the market's going up. This is my new favorite picture to do. The second step, we could skip it. If it's too much thought process right now in the beginning, skip it. With the market going up, do I have room to targets? Is everybody comfortable with that? The market hasn't reached trouble. I have room to targets to go up with my triggers. Pretty simple, right? But now, great entries create manageable trades. There's one thing you can do, bacon saver indeed, to define the momentum of the market, guys, and it has everything to do with where the most current price, the highlighted price, is in relationship to those small triggers that are up. 3 options. You can be left of the triggers, which is below them in a downtrend, above them in an uptrend. You could be right of the triggers, which is below them in an uptrend, and above them in a downtrend. Left, right, or you could just be hanging out inside. Now, if you're left of the triggers, this is the strong side of the triggers. This is the best side of the triggers. This is the odds favorable momentum side of the triggers. This is where 1 minute areas are most likely to break. This is where I'm looking for home runs. This is my big move look from the strong side of those triggers. If I'm on the weak side of the triggers, that's where reversals come from. I'm still looking for short trades because let's be honest, 15 minutes, a lot can happen in 15 minutes. But this is where 1 minute areas are most likely to bounce. This is where I'm getting paid quick and I'm waiting for the next trade. And then if I'm inside of the triggers, this is kind of that medium probability look. This is where when I reach a 1 minute area, I'm probably taking half of my profits. I'm getting to break even because it could create a bounce. They can all create a bounce. But by understanding left, right, and center, I know how I'm going to manage my trade before I ever enter the trade. Does that make sense, everybody? This is your management part. Coming into it on TradingView. First it's direction, then it's momentum, and then it's path. Nothing new. Only 3 rules. This is your trend trade, guys. This is the only one that I teach in this room. The plan that I give you has a momentum trade on it. The website with instructions even has a high volume area trade to catch tops and bottoms. If you don't understand this one, you're going to struggle with the others. So the trend trade, rule number 1 says that the 15-minute is not trading directly into areas. It's imperative that you have room to make money. The second rule says that the 1-minute area is not, or the 1 minute is not trading directly into areas. Did I mention that you need room to make money? The final rule is your entry rule, and your entry will look the same every time you take it, guys. You're going to buy or sell a pullback at an area. It could be a zone. It can be a 1-to-1. It can be a mid-band, not an outer band, not an HVA. And then you're not just getting it at the area the way you would on NinjaTrader. When the market pulls back to your area, your entry for a long trade is an up bar that finishes on the weak side of those small triggers coming against you. Or in a short trade, it's a down bar that finishes on the weak side of the small triggers that were up against you. So when I'm looking for a trade, the market's all the way up here. The moment the small triggers roll, I'm going to put a box around a lower area, and I'm going to say, this is where I need them to get. This is what I need to see to take the entry. It's going to look like this. And guys, play along with me. If you're one of my TradingView users, does everybody see that the triggers are up? Decidedly, right? That's the easy part, up and down. Now the most current price, 66.21 flat. Do you see how they're kind of inside of the triggers? They're not way out here to the left. They're not beneath them. They're in transition. I already know how to manage my trade. Nothing in the way. I got room to targets. Now when I'm making the decision, my 1 minute chart's all the way up here. The moment, the second, the instant my small triggers turn down, my job is to look lower, to look for a mid-band, to look for 1-to-1s, to look for a zone. And I'm going to say out loud, I'm going to teach my pets to trade, I need a pullback to that area. And when I get the pullback to my area, I'm not just going to jump in and hope that it breaks. I need an up bar that finishes on the weak side of those small triggers. Guys, that's your trend trade. Reversals come from the weak side of triggers. What you're doing is you're waiting for the small chart reversal to send you in the direction of the large chart. I want you to look at that one right there. It's not in an area. And guys, if it's not in an area, guess what? That's not your entry. So language becomes very important. Pull back at a 1 minute area, zone 1-to-1 or mid band. Up bar initiates the entry. In a downtrend, down, strong side, room to trouble. The instant the small triggers roll up, I'm drawing boxes. Whether it's mentally or physically, my entry will come from an area. My entry is initiated by a down bar that finishes on the weak side of the triggers. That's where reversals come from. That's the small chart reversal to put me in line with what the large chart is telling me. Does that make sense, everybody? That's your one trade to set you up to learn the rest of the trades. It's the only one you need. Amen. So guys, small triggers are down. Do you see it? I'm on the strong side of the small triggers. Let's make it bigger. From 88 to 79, I've got room to trouble. On my small chart, my small triggers rolled up. My job is to wait for a pullback to an area and a close below, but what's the problem here? I got all sorts of nonsense in the way. The same nonsense that stopped the market here 10 times, right? So there was your close below. Well, but it closed directly into an area. Do you guys see it? See that big green line that says don't trade into me? Now it could break, right? We could get south, we could find an opportunity. Or we could just be patient because the futures markets trades billions every day. And if it goes down from here, well, probably not my money. I'm okay. So as we get into the second half of class, guys, what we're going to do is we're going to look at the market and we're going to talk about those very basic rules. And we're going to look at NinjaTrader and we're going to talk about those very basic rules. And look at that. All that momentum and path, those rapscallions didn't get us. Sons of guns. And if the rules are met per the KISS plan, guys, we'll activate a limit order. We'll see if the small crowd gets us. We'll manage it according to the KISS plan. You guys want to see if this one gives it to us? First, it's momentum. Then it's clear path. And guys, if the trading gods smile on us, that's going to be our target. All I need is a pullback to that midband sitting inside of the triggers. Does that make sense, everybody? And I'm just waiting for it. They either get me or they don't. It either hits me or it doesn't. And if it does hit me, awesome. And if it doesn't hit me, that's crude oil. It is, Boaz. Just happens to be setting up right now. But the patterns are the same. On the S&P, what's the market doing? No separation, no clear path. I'm not worried about it. What about this one, though? Did anybody catch this trade? Anybody go short on the S&P, make some money this morning? It's a good look. Not a bad look. Maybe not your trade. Scroll back. There it is again. What you're going to find is that there's gaps in between the perfect trades. That sometimes they happen, sometimes they don't. Sometimes you have to wait. Sometimes it's like an ATM. You'll never know what the market's going to do. But what you can know with no uncertainty is that you have a methodology that you can prove wins more than it loses. And the closer you stick to your plan, typically the most success you find. Are there any questions? I'm going to take my 10 o'clock break. When I come back, we are going to look at the pictures that have already been presented. And then we'll just watch the live market, guys. We'll trade live, simulator, because this is an educational room. Because this is a room dedicated to informational purposes, to teaching you to read your indicators. I won't tell you when to enter, how to enter, when to exit. I'll say, hey, that's what it looks like when your rules are met. Let's see what happens. Win, lose, or draw. So I'm going to go take 5 minutes. I'll let you guys watch this. Maybe it sets up, maybe it doesn't. If you have questions, post them, and I'll start clicking on the pictures you guys have posted when I get back. Pull back to areas inside of triggers. There's my entry, my initial stop. 1, 2, 3, 4, 5. Ticks beyond the triggers. And now we're at the mercy of the market. I have momentum. Love it. Have a clear path. 100%. Had the pullback to the area inside of triggers where the market is most likely to continue. Guys, I will never know if this will be a winner or a loser. I can't say things like, oh, I have to take a loser I can't afford, or a winner I can't afford a loser. It's just probabilities. If I take this exact same look 100 times, I'm going to lose 20 to 30 of them. But I'm probably going to win 70 to 80 of them. That's what it looks like when the rules are met for the high probability trend trade entry. Your KISS plan says initial stops go 5 ticks beyond the trigger lines where the market should not go. This is where we cut ties with the trade because the advantage is gone. The KISS plan says targets are set at $100 and $200. And then the management of the KISS plan says if I get a reversal bar in the direction of my trade, I'll reduce risk behind it. These are divergence, not fibs, OG. So this is where learning a little language is going to help you out. Those are divergence lines. What divergence lines mean is that there was a loss of momentum at that pivot. That's it. So the sellers were pushing and the buyers fought, and you see it right there. There's a loss of momentum. And then the sellers tried again, and the buyers fought again. And hopefully that little loss of momentum is what it took to get me back to my perfect entry. Now, the only time these become problematic is if there are 3 of them in the same location. That's the only small chart termination condition. So we're going to let this play out. We're going to see what happens. KISS plan says if I get a reversal bar, then my new stop is 2 ticks above that reversal bar that's in the direction of my trade. Can I finish my trade, Wayne? Are those the ones you need just above? Cool. Let's see what happens in the trade here. I hate to ditch it. I appreciate that, man. Here, watch this. Boom, boom, boom. That way they're queued up as well. Whew, man. Guys, if you watch these ticks, it's going to drive you nuts. I'm up money, I'm down money, I'm up money, it's negative, it's positive. What does the large chart say? Does everybody see that the large chart says momentum and path, 100%? Why is it a coin flip, Wayne? What does that mean? Do you not feel as though so? I don't have any rules that say worry about 2 divergences. Large chart's beautiful. Wayne, you're making stuff up. I don't know. Maybe you have a trade plan that's different than the very basic one that we're following here in the room. Strong triggers, no terminations, area for entry inside. That's it. Hell, I got 1-to-1s up here, and I got a divergence high up here, and I've got Fibonacci resistance up here. Right? I'm in the moment. I'm in the moment. I've got momentum and path and a pullback to an area inside of triggers. I've got a pattern that I can prove typically wins more than it loses, which means that it's got a chance of doing either. Wild horses couldn't keep me out of this trade. It's the perfect trend trade. Now, guys, if you're uncomfortable with it, don't take it. It's that simple. Singing you too. If you're uncomfortable with a look, don't take it. If you're not comfortable taking a loser, don't trade. I'm not sure. Wild horses? Not sure. I probably don't even have synthetics in, so it probably looks very different, right? I just want you guys to see the pattern. So if you're brand new with NinjaTrader, tell me you see the pattern. And if you don't, let's talk about it. Here, watch. We'll close it out. And let's do it like this. And then we'll go and we'll start looking at pictures. A trade is momentum. Small's below the large, space between. Does everybody see it? Rule number 1 is met. Without question, 100%. A trade is a clear path. Price has not reached an area. All triggers are below. Rule number 2 is met. Without question. An entry is a pullback to an area inside of triggers. Is rule number 3 met, guys? So what do I do if my rules are met? I enter the market. I enter the market if all 3 rules are met. Now, when does divergence become problematic? Where the heck is my website? When is divergence problematic? Well, let's go to the instructions. Let's go to termination conditions. And there is one time when I pump the brakes because of divergence. 3 divergences in the same price range may terminate the trend. This is a very powerful condition when the 3rd divergence happens with the small triggers inside of the large, weak triggers. When the 3rd divergence is higher than the previous or lower than the previous, head and shoulders. But until this happens, guys, my job is to take this trade. My job is to take this beautiful look and be okay with whatever happens. Be all right with whatever the result is. Does that make sense? That's the hard part. What if? What if 2 divergences kills it? What if these green triggers kill it? What if that pivot stop out wasn't really a pivot stop out? What if these 1-to-1s are acting as a magnet? Guys, I can't do that. All I can do is say, my rules are met, I'm going to take the trade. My rules are not met, I choose to not take the trade. That's it. That's all. That's the whole shebang. All right, Wayne. The trend is down. Strong side of the triggers. Room to target. I like the RTT. There's your pullback to the area. There's your close below. You let the triggers go down and decided to trade directly into the zone. And I guess, I don't know why you exited revenge trade. That's not emotions. That's the perfect short. Couple times. And then it does everything it was supposed to do. Stop was too tight against the zone. Should have had 4 or 5 ticks above. Absolutely. It was a short to start. Oh, you went long. Oh, okay. I didn't see that. Oh, you did. You went long too. When all you really had to do was just hold your short all the way down to trouble, huh? So what got you out of the short? Stop too tight? Didn't want to lose? Didn't trust the pattern, right? These are things that you have to address. Stop too tight. So ask yourself, why did I put the stop too tight? When it was down, when it was strong, when there was room, why was I so scared of losing? What spooked you? For me, sometimes it's like, oh, large triggers, maybe that spooks me, right? I'm in a zone now. Maybe that spooks me. The cool thing is the zone is still resistance. I love it. And you're absolutely right. A little bit above the zone, it's the perfect trade. Now, I'm not sure what this trade is. Just adding on to get back down to test because a large chart said. I like it. Not a risk thing as much as a casual mistake. We all make those. I always try to identify it. And that's just me. If I make a casual mistake, and guys, I do. Everybody makes mistakes. I go back and I look at it. And I say, okay, where did I go wrong? And Wayne, that's exactly what you did. You identified that the stop was in the wrong spot. And guys, what that does for you, what the annotation's going to do for Wayne, is Wayne's going to think about that. Wayne's going to think about that next time he's in a trade. He's going to think about stop placement. He's going to go, man, it was too tight last time. Let me put it where it goes. I like it. I like that you do that. Were two of those links supposed to be the same? You got two identical links in there, and then we've got this picture. So your first two are the same. The trend is down. Nothing in the way. Wayne jumps in, gets out of trouble, lets it break, turns into a trend trade, beautiful, and takes it all the way down. This is awesome trading, and it's all momentum and path. First he jumps in and gets out of trouble, then it turns into the perfect trend trade and does everything the market says that it should, everything the indicators say that it should. Looks like a loser, Boaz. Looks like a loser. I would take that one 1,000 times. 1,000 times I would take that trade. I would lose that trade. Time to change the plan. Phil, I'm going to kick you out of my room. Not really. But that's what new users will say. New users say, man, I guess the plan doesn't work. Go find me 20 pictures of that setup. You'll be floored at how often it works. All right, I'm going to click on the pictures that are posted from this morning. We'll get some feedback going for you guys. And then we will bounce back and forth in between the pictures you guys post. Whoops, I don't need Pharrell videos, but I did enjoy listening to that this morning. Wayne, in your previous post too, the one that you copied, the links are the same as well. Estefania. And that's the last one. Cool. Oh, the bragging post. Stop in wrong place. I love that you do this, man. I would totally be bragging. Revenge trade. Back on track with trend. With trend. With trend, good loss. With trend, with trend, with trend. Wayne, I would call it a brag. It's beautiful. But what it really is look at this. Wayne says, these are my results. This is where my analysis went wrong. And look at that, with trend, good loss. I think this is awesome. I really like that you do this. Because what it does is now you're thinking about stop placement as you move forward. Now you're thinking about counter trend revenge and how it doesn't serve you. And you're accepting that losses are a part of trading. And you've written it out. Wayne, I think you probably do understand how brilliant this is. What a great habit for people to get into, to go back to look at what they did. What works? With trend, with trend, with trend. With trend. What doesn't work? Counter trend. Poor stop placement. I love it. Good stuff. Really nicely done, Wayne. I always learn something. You guys know that the trading journal's nothing new, right? For 6 years, I've encouraged you guys to track your real-time performance in a spreadsheet. For 6 years, I've said go back and ask yourself what worked and what didn't work. I didn't do this for the first 3 months of the software. It cost me $5,000. I'm trying to help you guys not do that. Track your trades. Look at what you did. All right, we saw that one. We saw that one. We saw that one. We've been there, done that. Let's see what's going on in the wonderful world of you guys. 15-minute up. Love it. Strong side. Love it. Room to trouble. Love it. Paul says, my large chart is about as pretty as it gets. And then, Paul, you just jumped the fudge in, right? Is it really a trend trade? In the middle of a zone, breaks a rule. Without a pullback, breaks a rule, right? Just jump the fudge in. Everything says up, you jumped in with it. Not a trend trade. Where's your pullback to the area? Didn't get one. It hit the area, danced, and then broke above, right? How do you manage it? Probably below that area. Does that make sense? You're with the trend. There's no doubt about it. And Paul, this is one of those instances where everything is perfect. You are the strong side. So not having any room, you pulled one off on it, right? Everything says up. So when you get in at 70, you got room on the small chart. And it just goes and you make money. And I like it. But you can't call it a trend trade. Where's your pivot low to put the stop behind? I have no idea. I'm in love with this car. That is so pretty. Nicely done. Look at that tool chest. Good stuff. Wayne, have a great day, man. It's a good look, Paul. She's a beaut, Clark. All right. Odds favorable momentum. Room to trouble. That is the perfect momentum trade. Everything says up. He gets in above trouble. Gets out at trouble. That's amazing. Nice job, Pete. Here's a trend trade. Tool chest. Yeah. Back in a different life, Trina, I was a motorcycle mechanic, so I appreciate a good set of tools and what can be done with engines. Trend trade. Triggers are up. Price on the strong side. Space to the area. Have you guys noticed that the large chart reads, they're really latching on to the idea that the big chart has to lead the way? Small chart, price pulls back to an area, close on the right side of the triggers. First profit target hit a few ticks from area, then got out a few ticks before outer band for 320. My man card is safe. Nice trend trade. And that's what we consider the trend trade, Paul, is that pullback, because it gives you the stop placement. It gives you the bounce. Doesn't mean what you did was wrong. I like to label my trades because when I know what kind of trade I'm in, I know how to manage it, if that makes sense. If all I'm doing is just jumping into a trade on momentum, I'm looking for a loss of momentum. And if I'm in a trend trade and there's nothing in the way, I'm looking for bigger moves. And I like to name them. So that I know how to manage them. All right. So Pete, 3 triggers through with the momentum. Divergence from a fib. You're missing your synthetics, Pete. Pull back to the mid band on the wrong side of everything directly into a pivot stop out at a fib. It worked. Good job. Oh, you don't need it. I'll show you what to do real quick. You ready? So go to your entry chart on NASDAQ and go to templates and load. And right here, it is the Nexgen 13.2 NASDAQ futures, 13.2 dynamic Renko bar. That's the one that'll load up your 13.2 to look exactly like a regular 5.1. So maybe we can save you a trip to Jason. It's a rough look, though. It's into all the trouble, multiple divergences, wrong side of the triggers, and you get paid. And guys, I love it when you get lucky. Room to move comes from the 15-minute. If chart prime areas are at the entry on the 1 minute, no, that's not true at all, Big Rat. Not true at all. So the trend trade says not trading directly into areas on the 1 minute because they can create a bounce. Does that make sense? Now this is the basic, the best of the best. And sometimes there's a lot of zones everywhere. You guys remember yesterday when we had zones everywhere? And then right towards the end of class, we got our rules met. Now, one of the things some of you guys are doing, right, is if you're on the strong side of the triggers, I see some of you taking chances into those zones. The afternoon was great. I made great money in the afternoon. I think I was a little over $1,000 when I shut down on a 2-lot. Some people are taking chances here. Guys, the NASDAQ is a little more difficult to trade in the off the open. There's just so much movement. And it's so fast. This was a counter trend trade. The large chart was confused. Well, everything says up, but guys, look at that termination condition. Pete says divergence from a termination, wrong side of the triggers. Pete, you want to see something funny? Well, I guess this one's not all the way through. So this one's not 3 triggers through. It's almost the same looking entry. But divergence from 1-to-1s, large short terms, small triggers down. Pete says there's no way in hell I can go long. I'm going to see if I can ride that momentum down. I like it. I love this trade. And I'm mistaken, Pete. That one at least had the potential to break. These were huge red flags. That one never even had the potential to break. If you're going to go counter, that's about the best way to do it. That's a good look. Letting the large chart say absolutely in no uncertain terms, no more longs. And letting the small chart say, we've already started down. Why don't you come with us? That's beautiful execution, Pete. And then with everything going down and all that momentum, room to trouble, jump in, jump out. Just momentum and path. Just momentum and path. And then there's your termination. There's your diversions from the fib. There's everything rolling. Not a lot of room to trouble. Get out, make some money. Nicely done. Tight trade. There's the beauty though, right? Everything says up. The momentum is overwhelming. The path is clear. Pete jumps the fudge in and just makes a whole bunch of money. Momentum and path. Have I mentioned that? Momentum and path. I know you do. Momentum and path. Fill zones everywhere. This was down here. Pretty sure there were no fibs. No, there were tons of fibs. Who was this? I want to make sure I get the right feedback to the right person. Estefania? Is that you? Yeah. Those fibs were there for hours. For hours. Now, unless you just opened up and your charts hadn't populated yet, then they may not have been there because they're synthetic. But see how they're there forever? That's 1256. They're definitely there. You have all the momentum. Those are the big boys. Okay. You have all the momentum. You've got absolutely nowhere to run. You just jump in directly into a divergence high, and it creates a big ugly bounce that turns into a trend trade. And the trend trade goes up with all the momentum, right? So Estefania, if you're just going to jump into trades, having nothing in the way typically makes it a lot easier. Does that make sense? You ever tried to walk through a closed door? Hurts the nose. Having nothing in the way, so much easier. Yeah, you pushed it. Here you pushed it with your face. And look at that. So from 07.25, you gave up. Your stop had to be nearly 4 points. $200 per contract. Trading directly into trouble. Now, if you were teaching, it was going too fast, but you traded it anyway, right? You just traded it anyway. So what if, Estefania, can I play devil's advocate? Yeah, but what you're doing on simulator is you're teaching your body that that's awesome, because when it wins, all your brain says is awesome. Let's trade into stuff. We're unstoppable. That's what you're doing. Guys, when you break your rules on sim, you get these little short-term victories, and then you do it in the live market, and it absolutely crushes you. Because look at that. Loser, right? Loser, 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 loser. But you happen to catch the one that won, Estefania. Didn't work, didn't work, didn't work, didn't work, didn't work, didn't work. And you caught the one that did. So 1, 2, 3, 4, 5, 6, 7. What's 1 out of 7? Is anybody good with averages? %14 win percentage on that one, Estefania. Just looking at the chart. Is that how you want to build your trading career? And I'm not beating you up, but you got to think about these things. Simulator's fun, right? Simulator's a blast. Estefania, you could have made almost the exact same money waiting for trouble to clear. Does that make sense? Just let it clear. Get above it. And then it did everything your trigger said that it was likely to do. And the market was moving crazy fast last week. And guys, if the market's moving too fast to make good decisions, it's okay to not try to trade it. It's okay to go to the S&P or something, and something that's moving a little more inside of your wheelhouse. I love the momentum. I really do. I just think that there's a couple challenges on waiting for the areas to clear. You guys have such an advantage knowing where these bounce points are. All right, auto entry short, all the momentum, right? Didn't fill me at the top, entered on the reversal bar, and took it right down to the fib. I like it. Move stop to break even and got stopped out. It's perfect. Adam, are you with me? So just for poops and giggles, 50.75 is an area that can stop the market. You see it echoed right here at the fib. Now you made $100, you were up 200, and you ended up at 105, right? What if, hypothetically, You took 200 at trouble and waited for the next trade. I'm not trying to create a management plan for you, but there's the idea of going break even when there's still room. And then there's the idea of seeing areas that can stop the market, right? And it's hard to get paid because we've all got that little what if monster that sits on our shoulder that says, hey, Adam, what if it breaks? Adam, what if it never stops? What if? And we lean on that one. That what if monster's a pain in the butt. Didn't see him till after. I love that. Guys, get in the habit of looking at the big picture, just like Estefania's fib. They'd been there for over an hour. Over an hour. So I like it. I like the trade. I like your head in the game, getting in on that reversal bar because you didn't get filled. You had room to trouble. I'm a big fan of getting paid at trouble. You want to know a trick that I do, Adam? And you don't have to do this. And guys, I'll share the things I do sometimes. So I know that the fib can be problematic, right? One thing I have been known to do is that when price starts to get below that fib, I'll just throw my stop a tick or two above it and say, I'll give back a little bit, but I'm not going to give back a lot. If it's really going to break and run, it can break and run. If not, I'm not going to give too much back because I know on both charts I got spots that can stop the market. I'm not saying that's the smartest management plan, but I'm saying that I'm not willing to give a lot back when I see termination conditions. It's good job on that one, man. Does that make sense? Why is it a good bottom? Let's do a definition real quick. You don't have to answer, but I want you guys to see the definition for a strong top or bottom. And I would use the word strong, not good. Let's define it as either strong or weak. So what creates a strong top or bottom? I'm so glad you asked. So first, it has to be a termination condition. That is a non-negotiable. It has to be price reaches an area, no triggers break. And then when your large triggers go from green to red or from red to green, that's what constitutes a strong top or bottom. And it does because the buyers were gangbusters. And then they hit that area. And when they did, the sellers shut them down so effectively that none of the triggers could break. And it creates a reversal. Does that make sense, Adam? Does that make sense to everybody in the room? A strong top or bottom is amazing. A strong top or bottom is actually rule number one for a potential to break trade. So first it was a weak bottom. It wasn't a termination. That's okay, right? But let's go to really what we're looking at here. Perfect termination. 100% area that could stop the market. Would you agree? Textbook could teach a class on it. Price reaches a divergence high. Absolutely no triggers break. And you just get run over. And if you're going to do this one, you need to be more aggressive on the first pullback. Really? If you're going to trade directly into an area that could stop the market, is aggression your best bet? Or is avoidance, right? So this is what I would put under the slate of avoidable losses. The understanding of the strong top or bottom will help. But man, that is textbook. And it's not even close, right? Your large triggers, that red fib isn't even broken. So not only is resistance, no, don't mark it as a dumb trade. Mark it as an amazing learning lesson. And you're taking the time to do it and have the conversations, Adam, which means that you're going to think about this stuff in the future. What you're doing right now is perfect. This is how people grow. So you have to identify the termination. But what I would do is I would re-annotate the chart and I would change this. And I would say something clever, like trading into terms loses more than it wins. Be patient, right? And then I would re-annotate this, where I would say, not a strong bottom. It needs to be the termination first. Does that make sense? So now not only have I just said, okay, I've identified where my analysis went wrong, and that's okay. Your analysis will every now and then. But now, Adam, if you're being true to the plan, if you're actually doing what Nexgen has been telling people to do for the last 20 years, you're going to look at that picture tomorrow with the new annotations on it, and you're going to realize that trading into termination conditions doesn't really work. And what's going to happen, and this is how my journey went, so this may not happen for everybody, but what I did is I started going to my trade tracking sheet every morning, and I started to notice into term, into term, into term, into term, and I recognized my thing, that thing that was keeping me from getting where I wanted to go. Because every time I traded into a turn, or at least 70% of the time, I was giving up $200 to $300 of my perfect trade profits. Does that make sense? So I'm a big fan. Re-annotate. If you post in my room and you get some feedback that conflicts with what you were thinking, talk about it. Coming from a ton of divergence on the small chart. Okay, so let's read into it. I've got momentum. I've got the potential to break. There was a pullback to the area inside of triggers. It didn't get there in time. You catch it on the way down. You make money. You make money. 2 triggers, potential to break, right? It's a late entry, but you know where trouble is. You get paid at it. And that's a great opportunity to get to break even. When you're at that thing that could stop the market, it's a great trade. I love that it got both of your targets. Nicely done. Like the one-to-ones with the mid-band and triggers, just didn't get there in time. NASDAQ's fast. Great looking trade, Adam. Terminations for days. Terminations for days. So one of the things that your automated system does, Adam, is it doesn't give you all the areas. You've got to be aware of your small chart because this fib 38 would have been over here. This fib 47 would have been over here. So divergence from a fib is one of the biggest red flags. Divergence from a fibs is one of the things that John Novak talks about in regards to sitting on your hands and doing nothing. That divergence from a fib is detrimental, and you're absolutely right. Do you see the small triggers? Get over here. See those small triggers, how they behave to support? Are we done with the lesson? Am I not seeing replies? Nobody's replying? Okay. They're here. Here's your NASDAQ cheat code, guys. Maybe we lost the room. It's a 13-2. It's a fast chart. It's a big chart. You're almost never going to win that fight. Almost never. How can you avoid losing that fight? If the small triggers are close and strong, sit on your hands. That's when you wait for the reversal bar, right? Not just a reversal bar. Get to the right side of those small triggers. Get to the weak side of those small triggers. And that's one of the NASDAQ little nuances, guys. If you're learning your patterns and you're working on your plan and you're trying to do it on the NASDAQ, man, it's fast. It is so fast, especially off the open. Nice trading though, Adam. Couple little opportunities in there to grow from for sure. Keep doing it. Keep plugging. Keep putting in the room. Love it. All right, Miss Trina, down, strong, room for 20 ticks. I'm not sure, Victor. I will though. Momentum is strong. Pull back to the area, went past several areas. And then when you finally get a close below, it just doesn't go anywhere, does it, Trina? Small triggers ran past several zones away from the large triggers. Is this an indication that I should not have entered? It's not. Everything is down. You still have room. You are on the strong side. It did pull back to an area. It did close below, right? It just didn't work. Trina, you could defend this one in a court of law all day long. All day long. It just didn't work. Doesn't mean you did anything wrong. Let's write the rules on it. If I have room to targets, and that's the only thing that gets me looking for an entry. If I have room to targets, you know how to manage it, right? What do the rules say? The rules say pull back to an area, but that's not all of it. Close on correct side. Trina, perfect. Perfect. What sort of percentage have we seen these trades winning over a sample, guys? I saw 73%. I think Phil was right in the same range, 73%. What does that mean? It means 27% of the time you're the butt, not the boot. It's just a part of it. So Trina, great job. Your rules were met. You followed the plan. You did everything perfect. And it just didn't work. It's a cost of doing business. These are hard because losses we consider failures. That's a perfect trade that didn't work. Change your language. It's a perfect trade that didn't work. Down, strong, room to target, pull back to the area. There's your close on the correct side. It does go right where you want it to. And then once it gets to the outer band in trouble, look at that bounce. So now you're at 50%, right, Trina? Exact same large chart read, exact same entry. This one just happened to work. I love that. Let's find 10 more and see if we can get a percentage for you. Brilliant stuff. Great job. All right, Big Rat says, so what do? Wait till it clears? My entry chart is full of zones. Well, yeah. One thing you've got here, Rat, though, is, dude, you've got 30 points in a ½ inch. Spread it out a little bit. A lot of times, guys, if my chart is super squished, it looks like I just don't have any room at all. And if I open it up a little bit, I start to realize that from the correct entry at 31, I had 11 points. I had 11 points. Did anybody catch that one? Triggers down, weak side of the triggers, room to trouble, close on the correct side of the small triggers from the area. 11 points to the first sign of trouble. Did anybody catch that on the NASDAQ? Or did you talk yourselves out of it? And if you talked yourselves out of it, why? What scared you? It's okay, Phil. It's all short. Weak side is nothing more. It's nothing more than a conversation about how to manage. That's it. Down is down, up is up, room is room. That weak side is nothing more than a management plan. Does that make sense? It will. Because I'm going to keep saying the same thing until you're so sick of me it clicks. That's what I do. All right, Boaz. Strong trending market, right? Divergence, divergence. You get in on the reversal bar. Third divergence was your exit condition. One of the challenges, though, Boaz, is you're not through the area. And in these strong trending markets, letting the triggers break typically is your best bet. And I don't see that fib that popped up over here on your small chart at 92. And it just held. And the divergences right from that number were letting you know it had a good chance. Third divergence would be the exit. And it looks like it went back up. But at that point, it's a good trade. Just didn't work. Maybe a little room to get out a little sooner with the divergence, third divergence. Miss Estefania. I love saying your name. Oh, look at that. All the momentum. OFM. OFM. Room to trouble. Where does the market usually go with odds favorable momentum and room to trouble? It usually goes to trouble. Did you really? 44.75. You exited almost low tick, Estefania. And then you gave it all back. Then you gave it all back. So this is twice that we've seen this today, guys. That is the most beautiful target I could ever paint for you. It hit it. Got to be willing to get paid. And guys, do whatever you want to do. But you got to be willing to get paid. That's the whole goal, is to get paid, right? Trend trade, triggers up, price on the weak side, space to the next area, entered the trade, but there was too much garbage in the way. What was the garbage in the way? Just didn't go. Was there zones right here? So you were on the weak side when you entered. They hadn't rolled yet. You entered at 54, which means that you are coming from trouble. You had an entry on the correct side of the small triggers. You had room to get to trouble from the weak side. What's the problem? Just didn't work. It just didn't work. Guys, it happens sometimes. Did you need to get stopped out all the way at 48? Probably not. So let's think about management real quick. It's already hit the zone 4 times, right? You're on the weak side. Large triggers are down. It fits the rules. Victor, do you suppose if they're able to get back below this zone, it's probably game over? From the weak side, coming from a termination. So now we're going to go a little next step. Because I know that it's weak, because I know reversals come from the weak side, because I know reversals happen often at areas, this is where you may get a little more assertive. Where you might say, I'll take that trade, but man, if they push back below this zone, I don't want it. I'm not going to give it the extra 3 or 4 points below the pivot low. Does that make sense, Victor? You can always take it again if you need to. That's next level. But what I want to focus on is that you took the right trade. It just didn't work. You fit the rules. Guys, the KISS plan is that foundation. It's that I'm learning to read my indicators. I'm learning to get in tune. Great entries create manageable trades. You will have to learn to manage your trades. You'll have to ultimately piece together more and more to become better every day. Down, weak side, you had room to trouble, right? Room back to trouble. Let's see what it looks like over here. There's your pullback to the area, right into a zone, right into one-to-ones in a zone. I love it. Sit tight, right, Claire? There's so much of your money in the market. Just pause, relax. What did it do after? That was it right there. What did they want? They wanted a higher area. Claire, brilliant. Isn't it nice when your rules keep you out of a loser and you're like, whoo, dodge that bullet. And then it pulls back to the area, closes below here from the weak side with room to trouble. Claire, did you catch this entry? Of course you did. Because for you, it's either rules met or not, right? It's not, well, this one didn't go, so it's probably not going down. This is the weak side, so it's probably not going down. Uh-oh, they hit a one-to-one down here, or I got a white bar here, or the outer band's looking crickety here, or whatever. You're just like, egads. That one fits the rules. Simplicity. My opinion is worthless. Just so you guys know, my opinion absolutely destroys my trading when it works its way in. When you can be so pragmatic that it either is or is not. It's very liberating, guys. It'll set you free. Weak triggers, I'm done. I don't have rule 1 met. No areas inside of triggers? Hell, I don't even have rule 3 met. Am I going to put all my eggs in a clear path? Would you guys? $66% of your advantages. 66% of your advantages are gone. Would you eat brownies if they were 66% poop? Probably not. Sorry, that was gross. Boaz, strong trending. No areas inside, so you get in with confirmation. Make some money. Market pulls back, strong trending. Clear path. You go with small triggers are still up. Nice. Make money. There's that second divergence, weak triggers. You take your exit. So help me with this one, Boaz. Just a little thought process. If you felt the need to exit here, why would you enter 2 ticks lower, right? At this point, get paid at the pivot stop out, right? But now we're 2 divergences. They're not even railroad tracking. They're stuck inside. And this is the one time that you didn't wait for confirmation. Confirmation worked. Confirmation worked. That's the one time you chose not to wait for it. I'm not sure why. What's different? You don't have to answer in the room, but ask yourself, why did I change my entry strategy against 2 divergences? Does that make sense, Boaz? Just something to think about. What's the difference? Because now it's below the triggers. You've just had a pivot stop out. Those are inside of the triggers. That was inside of the triggers. That's on the wrong side. I like, look at, and I do this too, Boaz. That's probably why I notice it so quickly, is I'll say something where I will say, no way in hell am I taking this long. And then my guts get twisty and I take it anyway. Like, I've seen pictures in the room where you guys post this in the room. No momentum, no area inside, not taking it, be patient, right? And you remind yourself, it's not my best of the best. And then that little what if monster comes in and you're like, oh shit, I better get in. I better get in because what if it goes without me? I better get in because what if I miss those ticks? I better get in because I don't want to miss the opportunity for a long trade even though my rules aren't met because I didn't get paid on any of this. Has anyone else ever done that? I've done it more times than I care to admit, guys. Where I will literally tell myself, no trade, no trade, no trade. And then I'll lock in on a tick up and think, they're going without me. Trina, have an amazing afternoon. Thanks for being here today. Great trading. Great trading. Great rules adherence. No deviations. Celebrate that victory. Good job. All right, guys, it's 11 a.m. So I'm going to take a few minutes. Terminations. We're into terminations. Did that one give an entry? That was a tiny little pullback. Nope, didn't even make it. Those sons of guns. I'll leave you guys with the S&P. What's the current read? The current read is I have all the momentum I could ever hope for. I do not have a clear path, which means I'm in a holding pattern. So I'll be back in 5, guys. Go stretch your legs. last hour. So what's the NASDAQ doing? Man, that one worked, didn't it? This is why, and Phil, are you with me in here? This is why we let strong, weak, transition just be a guide for management, because the triggers stayed down the whole time, right? And you're going to see this a lot. You're going to see them kind of waffle, get to the weak side. But man, this bar was nothing but weak. This bar was weak in transition. This bar was weak, transition, and then strong. 15 minutes is a long time. And now we are down. We are strong side. And if we pull back, we may have an opportunity. Does that make sense? Down, strong. If we get a big pullback, maybe up here, wouldn't we have tons of room to go down with it? Claire, are you long on the HVA? Let's see what Claire did. Man. Close below. A little bit late on this one, Claire. And it made it, didn't it? And it made it. $1,700. Is that a one lot? $1,700? That's amazing. And you have nothing to lose as it goes into trouble. I mean, just outstanding. And it fit the rules 100%, right, Claire? Claire, do you have a win percentage? You don't have to share it if you don't want to. Right now, I'm just getting feedback because a lot of people are somewhere in that 70%. You take more than just trend trades, though, so. All right, here we go, guys. Triggers are down. Strong side of the triggers. There's my first zone. You don't? That's okay. There's my first zone. Let's see what happens. Small triggers are rolling. Man, it's fun to be able to call shots, isn't it? Where do I not want the market to go? Above the bottom of that zone. There's my line in the sand. Are there any questions about what we're looking at right now? First, the triggers are down. We're left of the triggers on the strong side. I can do anything I want, sword trader. I can take all the counter trend trades. I can jump the fudge in. I can trade 1,000 lot. I can do whatever I want. Did you know that I could also walk into a tent with Ebola patients without any sort of respirator? I could jump into a tank of sharks in the middle of a feeding frenzy. I could jump out of a plane without a parachute. I can do whatever I want. America. Now, sword trader, love you back. Love you back. There is a trade called the HVA trade, the high volume area trade, that helps you capitalize on terminations in these HVA lines. And they're very specific rules. And they are counter trend. And why don't I teach them in the room? Because I want you guys going the distance. I want you guys here next week, next year, next life. Because you're taking the best trades with the highest chance of success. So if you can't make money with trend trades, if you can't follow one set of rules for a trade that we seem to be proving wins at least 70% of the time for most of you, why do you want to go counter trend? Why do you want to jump into trouble, right? That's the question you have to ask yourself. You ever gone to a buffet and ate food you didn't like? Most people don't. There's all the options, but you stick to what's good, right? If I go to a Chinese buffet, Kung Pao General Tso's. That's what I'm focused on. Well, John Novak says it, Phil. He goes, counter trend looks cool when it works. That's your HVA trade. From a termination, smalls above the large, pull back to the green line, and hope it goes up. That's your HVA trade, Robert. Profits taken at the first sign of trouble. But it's counter trend, right? Everything says down. Termination, smalls above the large, pull back to that green line. That's how you catch tops and bottoms. That's the HVA trade. If it works, it looks awesome. If it doesn't work, you feel foolish. That one's working. That's the HVA trade. Whoops. Hit our target, didn't fill. We'll just go ahead and close it out. That's it. There's rules for it. So if you have to go counter trend, we got a plan for that. But if you can't follow 3 simple rules, how are you going to hold your water on the HVA trade? Whoops, that's the wrong one. Let's go to the instructions. I believe there it is. Let me double check it. There it is right there. There's your HVA trade rules right there on the website. That's it. It worked, right? It worked. It fit the rules and it worked. First, you have to have a termination. That's rule number 1. Let's just do it like that. Let's just do it like that. HVA trade. Zone reached on the 15-minute chart. Do you see it? There's my yes. 1 minute small triggers turn and are above the large triggers. Does it fit? So far, 2 yeses. Buy or sell a pullback to the HVA line on the 1 minute chart. That's it. It's only 3 parts. Now you want to know what people mess up, sword trader? Do you want the ominous? This is where the mistakes happen. Small triggers below the large triggers is a huge mistake. Not having a termination condition on the 15-minute, huge mistake. Not willing to get paid. At trouble, it's counter trend. Huge mistake. What's the win percentage on it? I have absolutely no idea. I have absolutely no idea. $46 to $37. That's my pullback to an area. You're welcome. No worries. All you have to do is ask, right? Does everybody in the room understand that? And I'm not knocking you, but if you tell me you've been struggling with something, for the love of fuzzy, Why are you allowing yourself to struggle? Those triggers are trying to roll up, aren't they? Why do you struggle, guys? I'm here 5 days a week, 3 hours a day. All you have to do is ask a question. That's why we did so much work on entries today. Because somebody said, Mark, I need help with entries. Mark, I need help on waiting for the close below the small triggers. I need help with where my stop goes. I need help with reading the large chart. You got it. I don't know if this is going to work or not. That looks like they're trying to go back up, right? But until they do, they're still down. I like it. This one's probably not going to work, but it fits the rules. When we go through and talk about it, we'll be able to say, was it down? Yes. Did it have room? Yes. Did it pull back to an area? Yes. Did it close below? Yes. Did I follow the plan? Yes. What was the challenge? We already came off of a low, and those triggers are trying to roll. So that's where you take the very basics and you begin to incorporate, now I see more, now I know more, now I'm doing more. And that's how plans are built. No, there are no large triggers on my 15 sword. I don't have large triggers on my 15. All I have is small triggers to define direction. That's it. Large triggers are on the small chart. They define momentum. Small triggers are up, large triggers are up. I've got momentum up. But for the next 11 minutes and 46 seconds, I don't know if my large chart's going to go up or down until this bar is done. So I'm leaning on what it was. It was down. Take the trade and manage, guys. Take the trade. And what you're going to do is you're going to learn to weed out the bad ones. You're going to learn to weed out the looks that you don't want to fight. You're going to learn to, through study, through feedback, through continuous practice, you're going to say things like, okay, normally that would fit my rules, but with odds favorable momentum up coming from a termination condition, this is the one that I'm going to sit out on. This is the one that I don't feel like I have to be a part of. Does that make sense? Does it fit the rules? 100%. But now we go next level. But you've got to learn the perfect entry so that you can learn how to create a plan that suits you. Does that make sense, everybody? I hope so. And that's kind of what it is. We're going to learn to walk, right? And walking's going to be easy. And it's going to become so easy that we're going to skip a little bit, right? We're going to pick up the pace, and we're probably going to stumble because it's something new, and we're going to learn how to figure that out. And then when we get skipping down, we may trot, and then we may run, and then we may sprint. But guys, so many traders want to sprint before they ever learn to crawl. Let it be easy. Let it be focused. Give yourself the highest chance of success. Learn how to make money effortlessly. And then most of you, once you do, once you realize that you don't need all the trades, you stop looking for them. There's a lot of you in this room. You know who you are. I'm not calling anybody out. There's a lot of people in the room that latch onto the idea that it doesn't have to be difficult, that latch onto the idea that the best trades are really the best trades, and you don't need more to hit goals. And then they get bored. Or then they see other people. Well, I saw Pete take this trade. I need to take that trade. I saw Jen take this trade. I saw Victor take this trade. Hypoxic took this trade. Mike Lucas took this trade. Well, how come I'm not taking that trade? Well, because you never needed it to reach your goals. And now, Again, you don't have to put it in there, but I'm going to put mine up. Who was so successful with simplicity and then abandoned it and started blowing out accounts? Who was making daily profits and then decided that they needed more trades, stopped following rules, and blew out accounts? It's a common thing, guys. I call it the 30-day stupid, and I know stupid's a bad word. But the 30-day stupid says that after 30 days, your ego takes over and says you don't need those rules anymore because all the wins you've been experiencing are because of your greatness, not because of the edge that your plan creates. Well, you've got to trust, right? You've got to trust. And if you don't trust, how can you follow? If you don't believe in it, how are you going to stick to it? And guys, most of us omit the study it takes to develop trust. But if you really honestly took the time to recognize that with momentum and 3 triggers through, as long as there's not divergence, that's your entry. As long as divergence doesn't print into this trade, what is that, S&P? That's your entry right there. Because that's a strong bottom when that termination condition with all the triggers up. Now it's momentum, right? Now it's the potential to break. There's room to trouble. All I need is a pullback to an area inside of triggers. And I don't say, well, it's 1-to-1's not a fib. Well, that's not my favorite shade of green. Well, a midband may not be as strong as a fib. And just say, hey, it fits my rules. I'm going to take it. I'm going to do it on sim, and I'm going to work it out. Does that make sense? I hope that makes sense. I ask if it makes sense a lot, and you guys probably like, good, he keeps asking if it makes sense. Because if it doesn't, all you have to do is let me know. There's not one person in this room that's reached out to me privately and didn't get every answer they could ever hope for. There's not one person in this room that's asked a question in the room and hasn't gotten the answer that they needed. There's divergence. KISS plan says cancel the order. That's it. Either is or is not. All right, now I'm going to put the pressure on you guys. What do you want to talk about? What do you need to see? What are you working on? What's got you vexed? Mr. Joker, were today's entry lessons helpful for you? Would it help to go do another one? That did help? Awesome. You're one of my focuses. Did you, Estefania? That one right there? The one where you had momentum and room to trouble, and it pulled right back to the 1-to-1s, and you took that momentum style trade beautifully and got paid at fibs? What a gorgeous trade. Hadn't reached trouble, all the momentum from a strong bottom. And Estefania, do you want to see something cool? And I want you guys, this is huge. Down here, Estefania, you gave back $100 hoping it would break, right? But when you took the next trade, you said, I'm getting paid at trouble. That's amazing. That's amazing. Which trade felt better? The one where you were almost break even or the one where you came out $300? This one, right? It's pretty easy. So Estefania, do you think there'll be another trade today? Do you think a market that exchanges $174 million will probably give at least another opportunity? Hardest thing to ever do. Be okay getting paid. Estefania, I love everything about this trade. Thank you for not letting me miss it. First, it's momentum, and then it's path. And it's just a tiny little pullback to those 1-to-1s. It's more of a momentum trade because it wasn't in triggers. And it's just gorgeous. You did it so beautifully. I love it. I get excited about pretty trades. Mr. Joker, you missed your entry? You will. As a brand new user, you're likely to miss your entry. Yes, close below, but it was inside a zone. Second chance when the triggers roll. I like it. Thank you for that, Claire. I don't think I had the zone on mine the way you did. I may have. I might have missed it. Great job. Claire said, I got to let it get below trouble, not in trouble. Beautiful. Very, very nice. Mr. Joker, I have a picture for you. And it's fun to say Mr. Joker. I don't know why. You ready? This is for all of you new guys. When you're a brand new user, there's 3 entries that you're likely to take. The first one is where you just jump in from the fear of missing out. Has anyone other than me done this one? Oh my gosh, it's going without me. I better jump in. Guys, with momentum and path, it doesn't suck. It's not a bad entry. But that reversal bar says, hey, here comes the pullback. Great exit condition. But we hate to give money back. This is pretty normal. The second one is where that little small chart fluctuation starts up and everybody puckers and they jump in and you see an entry right at the top of that bar that never even went up and then it goes back down. I'm so guilty of this one in the past. That was my entry. And all I did is made my risk bigger and shortened my distance there. And then I've got number 3 where you finally trust it. But I'm gonna amend this one. I think that the third entry is when everything is perfect. You get in somewhere up here because you never learned the phrase pull back to an area inside of triggers and you second guessed it because you didn't trust it and you get in late. And when you get in late, it increases risk. And when you get in late, it reduces distance. So Mr. Joker, that's probably where most of my new users will get. You'll be working through the entry equation in your head as a brand new user, and then you'll finally get in over here. That's okay. It's already a trend trade and it's working. And then the goal is to get to number 3. The goal is to get to that magical phrase, entry at an area inside of triggers, because that's the best entry. That's the lowest risk entry. So as you guys work through this, give yourself permission to screw it up every way you can. But take the pictures, have the conversations, right? Show me what you see. Tell me what you see. Mr. Joker, are you comfortable taking pictures of your charts? Are you comfortable getting those pictures to the room? Because one of the things that makes the education work here, guys, is you saying, hey, Mark, this is what I saw. This is what was going on. This is why I waited for that entry. Because I'm not going to trade directly into an area. I have a higher chance of success over here. And then Claire just gets virtual high fives. You're absolutely right. I didn't notice that was in a zone. Maybe it looked different on mine. So if you're not posting in my room, guys, you're missing out on the most important factor. The most important factor. And look at that. Divergence prints. My rules say no more. Second divergence prints. I don't even have, no way. That's not my trade. My plan's not met. Avoidable losses. And if it goes, awesome. Does that make, I hope that, I'm going to try to stop saying, does that make sense? I feel like I latch onto a phrase and beat it into the ground. So I'm going to try not to say, does that make sense anymore? So what I need you guys to do is if it doesn't make sense, force me to clarify. Everything we do is about foundation. Everything we do is about very basic concepts with the understanding that eventually you'll probably learn more and you'll do more and you'll see more and you'll manage differently. You'll be more assertive. You'll be less assertive. You'll take quicker profits. You'll hold for bigger moves. Everybody's different. Grandpa always said if we all like the same thing, everybody'd be chasing grandma. We don't need that, right? Do it your way. But if your way is rooted in advantages, we're good. You're using your phone and going back over them? Are you not on a computer, Mr. Joker? Okay. Microsoft. So I use Snagit personally. And Snagit's awesome. Oh, you bet, Z-Robot. But Microsoft Snipping Tool is 100% free. And it's easy to use. So there's your link to it. You can install it. It's 100% free. And then when you have it, let me find mine. And you open it up. It's pretty simple usage. So there's your camera. And I'm just going to hit new. And it's going to let me pick the area that I want to take a picture of. Just like that. So now my snipping tool comes up. And now I've got a picture of my screen. And it's absolutely free. And I can literally right click and hit copy. And drop it right in the room. And now if I want to put text on it, someone told me that there is a way to do it from snipping. I've always had to hit edit in Paint. And Paint is included in Microsoft, so you already have it. But when I hit edit in Paint, I've got text options where I can write out, Mark, I saw strong triggers. Mark, it was only the potential to break, right? And then over here, I'll say divergence kills this trade. I sat out. And what you've done is you've said, all right, Mark, here's everything. And I think you have to save this one. I think you do have to save it. And it probably goes to pictures. I'd have to look that up. I've never actually done that. Maybe you go save as JPEG. There we go. So now we could put a spot. So maybe on my desktop, I create a new folder. And I'll call that new folder Class Pics. And then I'll save it in there. And then all I have to do is open up my Class Pics folder. Let's see if we can find it. Class Pics. And then I can right click. I can copy it. And I can drop it in the room. So now not only do I have the picture for the room, but now I've got it saved in a folder as well. And then just close it out. But yeah, now, Mr. Joker, now we can have a conversation about everything that you see and everything that you do. And I will give you feedback on everything that you present in this room. That's what makes it work. Anything in life is difficult to learn on your own, guys. Having a mentor, having a coach, having someone that's been there, that's done that, that's been through it, it makes a difference. It really, really does. So awesome. I'm glad that we just got over that hurdle. Very cool. Guys, I love teaching. Teaching is easier if I know where you're at, right? It's like an assessment, if you will. Hey, Mark, this is how I read my indicators. Did I do it right? Hey, Mark, this is what I saw. Did I see it right? Hey, Mark. Hey, Mark, the triggers are up. That's up, right? Here's where it broke away. Here's where it pulled back. Nowhere to go there. So I got to sit tight, right? I got to get above those small triggers to the good side of the triggers. And it doesn't look like it's going to give it to me. Not yet. And now I'm in trouble. Son of a gun. In the market, if you go big picture, is having a couple challenges, aren't they? Trying to figure out how to get to where they're going. How to do what it is they need to do. Mike Lucas, how we feeling? That's a new name. Hopefully you're doing great. Justin, how you doing? Mr. Raygun. Is it starting to come together for you guys? First couple days, it's a lot of information. And then the language starts to get familiar. And then the looks start to get familiar. The terminology, the entries, the logic, everything comes together right around day 3. And then you just start piecing it together. But guys, if you're not giving me the opportunity to give you feedback on everything that you do, you're missing out on one of the best parts of the education room. Nope. Not the trade yet. No room to run. So, good stuff. No momentum. All the clear path. Not high probability. Strong trending market. Some people say just buy the midband until it stops working. That's a strong trending market thing. I'll force them to start going in the direction of my trade. And I'll say, okay, the sellers lost out, the buyers took over. That's how much risk I'm willing to put on this trade because I'm not inside of triggers, guys. When you get 30 plus bars in the same direction, momentum is assumed. And there's this logic that says buy the midband until it doesn't work. And you know which one won't work? The last one you take. And you never know which one is going to be the last one. So if this one stops me out, I'm out of the trade. I'm not putting $1,000 on it. I'm giving it $80 per contract to say in a strong trending market, I will buy the midband until it doesn't work. It's worked once. I don't know if it's going to work again. Where am I hoping they go? All the way up to Fibonacci resistance. I don't know if they're gonna. And the only thing that takes me out of this trade is my management rules for trend trade not working out. Going to where I've deemed the market shouldn't go, what I'm willing to risk on a trade that's on the wrong side of the triggers already. Maybe I'm taking first profits up where the market already had a slowdown, right? Maybe I'm hoping for that big move. You've got to know what you're going to do before you get in. Strong trending markets are great, guys. It's a market that's established, that the sellers don't really have a grip, that the buyers are in control, and very often they're looking for those Fibonacci levels. And it becomes an opportunity. And you might say strong trends end, right? So I'll take $100 if they give it to me, and I'll go break even, and I'll just let the last one run. Does that make sense to everybody? Strong trend, clear path, buy the midband till it stops working. That's it. That's all it is. Rinse and repeat. Will it stop working? Yes. You are not allowed to get pissed off because it will stop working. You just got to say, well, I guess they're done. Targets can be anything you want. I want them to get to Fibonacci, right? But I'm also here to get paid. So I'm going to take $100 if they'll give it to me, and I'm going to go break even. And then I'm just going to let it run. Paul, 15-minute up, transition. There's your pullback. There's your close above. There's your entry. Make a little money. And now it's starting to waffle. That's all right. I've never been mad about $170, Paul. Nice trade. Go team up. 170. Do it 3 times. It's amazing. Get up there. 1 tick away. They're just messing with us, right? So what would take me out? A lower divergence. So I'm going to put my stop 2 ticks below the reversal bar in case this divergence becomes true. I know my plan because a second lower divergence could push it lower. If it never materializes, I'm holding for the 100. If it materializes, I'll take my exit. It'll cost me $40 per contract. It is 11:40 in the AM. What can I do for you guys? 180. Get up there. I'm 1 tick. Oh, it hit it, but it didn't get it. Son of a gun. Same rule. 2 ticks below the reversal bar marker. If divergence is true, I'll exit. But what's going on? Now I'm above those small triggers. I like that. I'm on the weak side of down triggers. That's where reversals happen. All of my indicators say up. It's already bounced off the mid-band. I know exactly what it's going to take to get me out. I'm going to sip my water and let the market do what the market does. Did you guys know that I'm not in control? No matter how confident I sound behind this microphone, I'm not in control of whether it wins or loses. Has anything changed on the large chart? Doesn't look like it. Still a strong trending market with room to trouble, right? That's what the large crowd wants. Second lower divergence, exit. If it doesn't happen, I'm in it for the duration. Anyone ever exit on the potential? Oh, divergence potential was there. Yeah. Exiting on potential is like living under a desk because you're afraid of an earthquake at any moment, because you're afraid that a plane is going to crash through your roof. Let it formulate. Force it, right? Force it to get you. I've watched the market have a 100-point move with the potential for divergence all the way up, all the way down. It's just potential. That's all it is. It's not actual. Not actual. You'll get paid at even the potential, Boaz? That's cool. That's your plan, right? Boaz says, even with the potential, I'm going to put a little money in the bank. Because what if? Oh, there's that phrase again. What if? What if that potential becomes real? What if my wife leaves me tomorrow? I should divorce her today, right? I'm going to call the divorce lawyer. Because she might wake up tomorrow and say, I don't want to be Mrs. Novak anymore. So I better get rid of her before she gets rid of me. It's the same logic. What do the indicators say? What do they say is happening? They tell me that the market is going up. They tell me that it's a strong trending market. They tell me that there's room to trouble. They're telling me that they bounced right off of a mid-band. My indicators say, hey, you're even getting to the good side of those small triggers. And there's one thing that could materialize, but if it doesn't, why are you reacting? I'm prepared, right? I've got a flashlight. I've got some canned raviolis just in case. But just because I'm prepared for a hurricane doesn't mean that the hurricane's going to come. I like it when we take these trades and there's thought process, right? If this happens, then I'll do that. If this rule is met, then I'll look for that rule. If this profit is taken, then I'll go break even. And if none of my ifs come true, then I'll do nothing. If you guys just jumped into the market, that reversal bar was your, hey, GTFO, we're probably going lower. Does anybody recognize that pattern? Reversal bar prints. It's torture, right, Estefania? Because you don't trust, because you think you're in control. Because we all believe that we're the reason the market goes up or down. I'm in this trade, they're probably going to get my stop. I'm in this trade, it has to go to the fib. I'm in this trade, those ticks are annoying me. Guys, you got to work through that. Either is or is not. Either does or does not. Rules are met, rules are not met. And if your rules are met, what does your plan say about how you'll react? What does your plan say about how you'll manage? All right. Oh no. Oh no, he said in a panicked voice. What if? What if divergence is true? What if they come get my stop? Oh man, I better just close it out. I've done it. I've done it. What if? Stupid what if monsters. I think it's fun to do this, guys, when you get to watch and you get to hear if then. If this happens, then I'll do that. If we go this direction, then I'll do that. I don't have market flow, Boaz. You'd have to look at yours. I don't have market flow. I don't use it. I don't teach it on Rinko charts. I can if you need me to. I certainly can. But what does it change about whether or not your rules are met, right? Boaz uses market flow charts. Where are we on? Crude? I'm getting there. Let's see what market flow says. It is slow, isn't it? Market flow says you pulled back to an area. Smalls are below the large. Doesn't help, doesn't hurt. We're break even, but we're right at the mid band, right? In a strong trending market with room to trouble. Guys, the day I get upset about 3 ticks is the day I stop trading. Come get me if you want to get me. Don't care. Yeah, crude oil pretty much dies at 11 a.m., guys. It pretty much dies. There's divergence. My rules say close the trade. That's it. I lost 2 ticks per, right? To see if I could get that thing to go up. But that was it. I knew exactly what I had to do. I knew exactly where I had to do it. I knew exactly what it would take to get me out. And I didn't have to rely on my guts. I didn't have to rely on my hopes, on my wishes, on my wants, on my prayers. All I had to do was follow the plan. All I had to do was say, this is what my plan says. And because this is what my plan says, this is exactly what I'll do. Does that make sense for you newer users? That's one of the hardest things to do. I know my plan says this, but my guts say that. I know my plan says no trading in determination conditions, but the demons in my soul say go long anyway because they're going to go without you, right? Miss Claire, this is a close above, but not an up bar. From 570, does it matter? But you're absolutely right. It's a down bar, isn't it, Claire? So the most basic rules say it needs to be an up bar. That's it. Claire, you are entitled 100% to break away from those basic rules. Where was it? It was somewhere over here, I think. Right around 1137. So it was, I don't know which one we were looking at. I don't know. I think it was that one. No, maybe not. I don't know. It's hard to tell. Sure went up with those triggers though, didn't it? So Claire, there may be a point in your life where you say there's the up bar that almost closed and then there's one that finished above. I'll go ahead and take the trade. You may say that. Guys, anytime people ask me, and Claire, you didn't ask, I don't want to suggest that. How do I break my rules? If I don't get my rules met, how do I get an entry? If there isn't a pullback, how do I get an entry? If there's not a clear path, how do I get an entry? Well, the Sunday school answer is you don't. You don't get an entry because your rules aren't met. But you are an intelligent human being, and life is all about growth, that you start taking pictures and you start doing study. And Claire, you go back and you look at that exact same look and you say, when all of my rules are met, does a down bar that closes on the correct side of the triggers win more than it loses? And if the answer is yes, then, well, that's pretty much the clinical definition of an edge. A pattern that you can prove wins more than it loses. And guys, most people won't do that work. Most people just want the money. And Claire, again, I'm not pointing at you here, but your chart just sparks the conversation. Most people won't take 25 pictures of strong triggers so that they never miss a strong trigger. Most people won't write down the recipe for a termination condition because they'd rather get paid, right? Most people won't take that sheet that I gave this morning. Every day I say, all you have to do is write this down and you'll never miss an entry. And most people won't write it down. I can remember, I can do it, I've got this, I'm not worried. And I'm going to tell you, most people won't say, that's outside of the triggers, it's no longer my trade. And you guys don't have to be most people. You really don't. You've got the golden goose. Don't turn it into fried chicken. So let me show you what people typically do. This is how we're going to end today, because I love this picture. This is the Mark Novak story. Everybody gets the software. And if you paid for software, you believe you're entitled to wins. Well, I've got the best software on the planet. I should be winning. Well, looks like fun, right? You see people in the room winning. And then you realize that there's rules to learn, that you've got to figure out these things, that you've got to do the study, that you've got to participate. And then there is that, I jump into trouble and I got paid. I fought the trend and I got paid. I got in on the wrong side of the triggers and I got paid. Those short-term victories, I don't have any idea what I'm doing, but the dopamine feels good. And then you go live. And guys, God bless prop firms. I went live with a $7,000 account from selling my house. That's what I allotted to my trading. 30 days in, had never taken a picture, written a rule, or asked for help. I lost $5,000 in 2 hours, 21 trades. I'll never forget it because it was the sickest feeling that I think I've ever had. And I got knocked down to the I don't know shit stage. Pardon my French. The I don't know shit stage is where you're forced to make a decision. I'll remember never works. There's a really famous trainer, I don't remember who it was, but they said there's no such thing as a mental plan. It has to be written out. So when you get to the I don't know shit stage, and I'm just going to go ahead and swear because you know what? I'll pretend I'm a sailor today. This is where you make a choice. You either quit trading forever and you decide that the software doesn't work, that the market hates you, that life isn't fair, and you become this victim, or you say, every day, I'm presented the path to success. Every day, I'm told exactly how to get to where I want to be. All I have to do is learn rules. I can do that. All I have to do is simulate. There's no reason to blow out $100,000 when you're learning something and then post in the room to make sure that I'm doing it right. Because Nexgen promises me all the feedback I can handle, but I'm too big of a puss to put it in the room because what if the other 34 people laugh at me? Guys, you got to work through that. And then you got to keep it simple. I don't need counter trend trades to be successful. I don't need all those moves. All I need is the best moves and learn how to get paid. And if you do this, you get the analysis, you get the rules, you get the coaching, but it's still on you, guys. If you don't do the work, how can you expect the results? But if you choose to follow the path, that's typically where you end up. So forgive me if I sound preachy or scoldy or finger wagging, right? But you've already been given everything you need. Most of you just don't want to work. If you were my kid, I'd say stop being lazy. I had a mentor in my tattooing when I was learning, and that's exactly what he would call it. If you let a mistake go by, it was just lazy. Don't be lazy, guys. Be proactive. This will change your life. Put the work in. All right. So, on that note, sorry, kind of a downer. I'm going to